2018, Morguard North American Residential REIT continued to grow the portfolio by acquiring properties in major markets across North America. Our depth of experience in multi-suite residential properties allows us to provide real quality to our tenants and solid returns to our unit holders year over year. And by ensuring our properties are well maintained and continually upgraded, we help increase their value and their potential for greater revenue. As a large-scale real estate investment trust, we enjoy two distinct advantages. We own a diverse portfolio of multi-suite residences located in economically buoyant markets throughout the United States and Canada. And we have a management team with a proven ability to identify profitable, revenue-generating opportunities. At year-end, our portfolio was comprised of 16 Canadian and 31 U.S. multi-suite residential properties, a total of 13,430 residential suites, mostly located in urban centers and major suburban regions. We are always looking for ways to maximize cash flow from our portfolio. We do this by examining regional market conditions, managing operating expenses as a percentage of revenues, and strengthening the asset base through infrastructure improvement and capital expenditure programs. The result, we've been able to maximize occupancy, and at year-end, our overall rate of occupancy was 96.5%, up 2.1% compared to 2017. Our strategy also helps maximize rental income. In our Canadian portfolio, the average monthly rent, or AMR, at year-end was $1,373, an increase of 3.5% over 2017. In 2018, the Canadian portfolio turned over 17% of its suites, achieving AMR growth of 11%. Our U.S. portfolio's average monthly rent was $1,236, an increase of 2.7% over 2017. Our experience has shown that by having a presence in vibrant markets throughout North America, we can achieve financial stability and strong financial performance. With a total of $2.9 billion in real estate assets, we are diversified by country and region, with 40% of our residential suites in Canada and 60% in the United States. We are additionally diversified by property type as well as demographic profile of our tenants, with 13 high-rise, 6 mid-rise, and 28 low-rise residences. And we are diversified by our net operating income, with 38% coming from Canada and 62% from the United States. Our external growth strategy focuses on acquisition and capital improvement of multi-suite residential properties located in urban centers and major suburban regions. In the spring of 2018, we acquired a 116-suite property in New Orleans, Louisiana for $11.6 million US. Vacant when purchased, the property is currently under development. This Garden District property is located near our 135-suite apartment complex, The Georgian, giving us the opportunity to increase our presence within the area as well as benefit from management efficiencies between the two properties. Since our inception, we have been committed to improving our operating performance through capital improvements. This helps ensure a property remains viable with a higher rental income potential. And with our online management system, now available throughout our US and Canadian properties, tenants can log in, make rental payments, and request services. This has the benefit of improving customer service and enabling us to better prioritize certain initiatives, streamline work orders, and help minimize maintenance costs. Our commitment to keeping our properties to a high standard while managing them cost-effectively has kept our operating costs low, rental rates optimized to current market rates, and occupancy rates high. At year-end, occupancy was at 99% in Canada and 95% in the United States. The REIT's portfolio continues to grow and generate stable income and enhanced returns. When we started in 2012, our portfolio was valued at $1 billion, comprising 20 properties with 6,376 residential suites. Since then, our gross book value has tripled in value to $3 billion, comprising 47 properties with a total of 13,430 residential suites at year-end. And we keep performing. In 2018, our revenue from real estate properties was $241.4 million, an increase of $14.9 million or 6.6% compared to 2017. During 2018, our net operating income was $131.7 million, an increase of $9 million or 7.3% compared to 2017. Our net income for 2018 was $174.7 million, an increase of $1.6 million over 2017. And basic funds from operations were $61.1 million, an increase of $1.4 million or 2.4% compared to 2017. In 2018, the Board of Trustees announced it increased the annual cash distribution by 2 cents per unit, effective for the November 2018 distribution. This brought the distributions to 68 cents per unit on an annualized basis from the current level of 66 cents. Since our 2012 inception, we have delivered an annualized return of 14% to unit holders, a cumulative total return of 142%. We will continue to follow our strategy of consistently growing our portfolio with high-value assets in vibrant markets throughout Canada and the United States. But to do it successfully requires consistency. Consistency is key when profitably managing and maintaining a rental portfolio, and that starts with the desirability of the properties themselves, a combination of great location, great quality, and great service. And by maintaining high standards for our properties in desirable locations throughout Canada and the United States, Morguard North American Residential REIT has been able to create value for our tenants and our unit holders alike. With active portfolio management, enhanced returns follow.